Hi there, Jim McCabe with the Knights of Columbus here, and welcome back. This is a third video in a short series. You should recognize the difference between whole life and term insurance and how whole life insurance works, and those should jog your memory. If they don't, then stop this video here and go back and view those first, because that's important to understand before we move on. This video is to help you understand universal life and how it works. Now, I am not an artist, but this should look something like a bucket. I think the easiest way to understand universal life is to understand it using the bucket concept. You see, with term insurance and with whole life insurance, the parameters of the policy are laid out by contract, and literally the responsibility for its performance is on the shoulders of the insurance company. With universal life, the responsibility for its performance is up to you. The way it works is just like this. You take your dollars, your premium dollars, and you give them to the insurance company, and they put those dollars into the bucket. Your objective is to fill this bucket up with money. Now, it seems like a bucket full of money would be a good thing, doesn't it? And it probably is. But this bucket is engulfed in that contract. And this is what actually happens with universal life insurance. So you've got your bucket, you're putting your money into it, and the bucket has a leak. But before we get to the leak, I should talk about the money the insurance company puts in. So the insurance company takes the money in the bucket and invests it, and returns some of that investment to you. That money also goes into the bucket. And again, your objective is to fill that bucket up with money. The more money in the bucket, the better off you are. Let's get back to that leak, because that leak is literally the cost of insurance. And the thing about it, we learn with the difference between whole life and term insurance, that the older you get, the more likely it is in any given year that you're going to die. So as a result, the cost of insurance as you get older increases. As a result, the leak in your bucket also increases. And increases. And increases. There's some other leaks as well. There's service charges and sales fees and management fees. There's all kinds of different things the insurance company can put in there. In fact, I've seen some companies that actually charge you a fee for accepting your check. But I digress. This is the cost of insurance that goes up as you get older. And the problem is, as time goes on, when you first start out, your money in the bucket is rising. Then you get to a point where the money is going down. The money is leaking out faster than it's coming in. The problem with that is that if your bucket runs out of money, the insurance elapses. It's gone. I still remember my mom had one of these policies. And I remember the insurance company coming to us and saying, we need more money to keep the policy in force. And since the insurance was important to our family, we did that. But we despised paying those increased premiums year over year until my mom did pass away. And it did provide a death benefit, but it was painful to fund it. I don't want the same thing to happen to you. So I want you to understand how this works. If this bucket runs out of money, in the case of most universal life insurance, the insurance company is going to do what they did to us. They're going to come to you and say, we need more money, or else the insurance is going to lapse. Usually this happens when you're at an advanced age where insurance is expensive, or you're not healthy and you can't qualify for insurance anymore. Either way, it's a bad, bad surprise, and it usually comes at an unfortunate time. Now, I should tell you that there are companies out there that have a thing called a death benefit guarantee. What that means is that even if as long as you pay the scheduled premiums, even if the bucket runs out of money, the death benefit is guaranteed. That's a good thing. But it's gotten to a point where very few universal life policies have that aspect to them. I can tell you that the Universal Life the Knights of Columbus offers to its members does include a death benefit guarantee. In fact, you cannot opt not to have it. It's part of the base policy. So as long as you satisfy that death benefit guarantee as far as paid premiums, even when the bucket runs out of money, the death benefit is guaranteed. And that's why we got the life insurance in the first place, isn't it? Here's the thing. I find many people don't really understand what they have until they sit down and look at it with a professional. I cannot urge you enough to sit down with a Knights of Columbus agent and he will review the policies that you have. We're not replacement artists. We're not in the habit of replacing good insurance. If the insurance you have fits your needs and you understand it, how it works, and it's well suited for your life, we're going to help you understand it better. We're going to make sure the beneficiaries are up to date, and we're going to congratulate you for having it. But if, by some chance, it doesn't fit your needs, if it's not going to do what you expect it to do, if it's not good for your family, we have an obligation to let you know what your options are. We take that responsibility very seriously as Knights of Columbus agents. I strongly suggest you reach out to your agent and sit down with him today. I hope things are going well for you. Until I see you again, take care and God bless.